Test, 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 test. Traders, what's going on? Jamie Saettele here. It is May 17th, 2017. Let me know if you can hear me. This is the SB Trade Desk Midweek Strategy Webinar. So I want to make sure that it's had something funky happen, it seemed like, right here. Kelly, what's up? Pete, Raphael. Okay, so we seem to be good here. All right, so we're going to be doing a lot of live. I mean, it's always live, charting, but with the market finally, markets like FX, finally getting some good movement, some good flow here. We'll be looking. I'll kind of be going through my analysis, so you basically kind of see how I go about it. Because I haven't really had a whole lot of time to put together the charts like right now as far as what I would be trading, just because I've been trading this morning, and it's been a little it's been pretty active. All right, so this is DXY. This is essentially the same chart from, I guess it was last Thursday, so about a week ago. And here's our support line, our old support line that was resistance, like to the tick. And we've actually met the level that, if we're going to get a low in the dollar, it's kind of now, right? Or based on the measurement. 2 equal legs down, and again, this 1, 2, 3, 4, 5 being a diagonal. So again, this is heavily euro based, right? 58% euro. So it's a big spot, and it's one of the main reasons I wanted to bail on that dollar yen trade. Even if dollar yen can go a little lower, I have a feeling we could get a bounce here. So all right, this is just a big level. That's the big thing to understand. What about if we go to a longer term slope chart, right, which always seems to serve us very well? So you have here's your slope here. Again, this was last May. This is a year ago, right? And you've got a slightly lower level here. All right, so, like I wrote last night with euro, it's kind of a tricky spot because you don't, you have like euro pressing into a big level, the long-term median line. DXY has now reached this level, so I'd be, interested in potentially putting on or getting at least bearish euro. That doesn't mean shorting it; just means having a bearish opinion up here for a little bit, and you want to wait for kind of until they cry uncle, I think. Okay, so this is a close-up. Let me get rid of the averages. So this is a close-up of euro with the long-term median line. All right, I think the level to pay attention to at this point, again, DXY has already reached its level, but the election high up here at 113, okay, a little, a bit above the next parallel. Now, what this line seemingly comes out of nowhere, right? Hi, Sandy, how are you? This line seemingly comes out of nowhere, but here's the deal. What this is taking, obviously, this slope, right, off this. We were working off the 1220 line with such a good level. Although unfortunately didn't really hit the median line last Thursday, which we were looking for. And since then, it's gone straight up. But that is an extension of the distance between the median line and the upper parallel. All right, and it's oftentimes a common level to see some sort of a market response. So that level is going to be up near 1240. And the interim pretty simple. This is the top side of your, the former channel line, which is resistance. And remember, this is like our favorite. Setup, or my favorite setup, right? You break through the channel and then come back and test the top side as support. So I would watch closely, pay attention to this level as as your next as support, right? And that's going to be 1040 or so the next couple of days. So any sort of pullback like that would be, you're talking about 100 or so pips pullback would be, I don't know if it happens from right here or not, but again, that is the setup. Once you come back into here, you expect to see support there. So, regardless of, there's no need to, you don't have to try to make a grand decision on whether or not the dollar is putting in a low here or whether it's about to collapse. Bottom line is, what's the setup? And our setup, we know well, is this one. This is the top side to watch. So I will leave it there. Another thing that I want to take a look at here. Okay, this is log. We've met this level. Next level will be up here. Another thing that I want to pay attention to or show you. So, what if we have something like this? It's really the same. It's really the same idea, right? In fact, I can probably make it a little better. So this was our trend line, our slope. Okay, that was our channel. This is the level now that we would want to see support at, the blue line, if the euro is about to go absolutely nuts. And look, sentiment's getting a little heavy, or nuts on one side. The dollar bears or the dollar bulls have vanished, and we're probably getting I'll be surprised if we don't see the dollar featured on the Wall Street Journal the next few days as kind of getting beaten and battered. So we're probably a day or two or so away from getting that and getting a sentiment extreme for a good counter move or even a reversal. We don't have to make up our minds on what it is at this point. But check this out. So see how that trend line in our old trend line, right, channel, see how this crosses these levels? Beautiful. This could be eventually something that's in play. All right. Again, just trying to present so that you have this, in your mind. All right. But either way, just this is blue line. That's what to pay attention to. All right. However high you go from here, this is support to watch now. All right. You get down there, watch for support for a long. If it just tanks back below within the channel, then the whole thing's a false breakout, and the likelihood that you've seen some sort of an important dollar bottom is probably a little more real. All right, let's go to dollar yen, which we were fortunate enough to catch really the entire day and some of yesterday, the entire decline, which is at this point, it is the longest or largest decline. On a 1.55% right now, you had a 1.61% decline on the 23rd and a 1.6% on the 5th of January. We actually were short back here, so we've caught two of the largest declines of the year on dollar yen. So what about dollar yen? What's the deal here? So dollar yen has kind of seemingly wiped out both sides of the market at this point, it would seem. Remember the trend line here, right? You stopped there, thought we would come off some, and then we broke through it. People got mad bullish. You know, we were looking for failure, didn't really get the level we were looking for. 114.60 was the first spot, and then 115.09. But once we started to roll over, we said screw it and just kind of went short yesterday. And now we've retraced everything on May, so we're back to unchanged on the month. It's also the 50% retracement. Pretty good spot to get some sort of stabilization here, right? You can see here we are, May open May right here, and we're back at 1123 is the low today. So if we get a bounce of sorts, which I think we could, I'll take you to a shorter term chart to see the 618, by the way, is 110.50. And then, of course, you got the 110.10 down here. But here's what our focus should be on dollar yen short term. So let's see here, dollar. All right, dollar, it's dollar CAD, dollar yen. Again, we are going to have to kind of do this here together. All right, so update the charts. All right. So the natural, obvious level that would come into play is actually this trend line again. Okay. The other level is based on the original upslope trend line from down on 416 from the low. And remember that line right here, which I'm going to make in red at this point, crossed a lot of good price action, right? It was the high after the election, first round election. After that, it was support, really from 426 through 430, and on the way up. So you really do have 2 points at which you would be watching for, a dollar yen bounce to fail. All right. And it really starts at this line, so it'd be 112.39. Okay, and again, that's the low from 5.8 up to this red line. And look, this is a very, this is a headline-driven market. Okay, like my contention with people that try to just trade on the headlines is that it's not the headlines per se that drive, the extent of the move. Like you have to have, the market has to be in position to be surprised, right? So there's points when bad news doesn't really matter anymore, right? Supposedly bad news doesn't matter anymore. This market was obviously in a position to be surprised to the downside because we had gotten into a big resistance level and we were looking for that turn lower, and we started to see behavior changes like high volume levels on the downside, which were then broken, and blah, 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 right? So in markets like this, these headline-driven markets, whatever you want to refer to them as, you do tend to get, you can get some pretty nasty mean reverting moves. In this case, you've had a sharp move lower, so you can get sharp counter trend rallies like this whole Comey-Trump thing, right? Who knows? Say someone comes out and says, oh, it's nothing, and then all of a sudden the S&P rallies 20 points, right? Well, dollar yen's going to rally 100 points if that happens. So we have no control over that. I'm just saying it is a market where you can see that type of action, right? So be aware of the possibility. And then what you want to have in front of you, right, is you want to know the levels at which it's best to fade that type of thing. So again, we're back to the monthly opening price here. So I'm fine being out. Can dollar yen go lower right now? Sure. The next big level to pay attention to on the downside is probably, said 1050 is that 618, but pay attention to 110.75. It's a square root level. It's also remember the trend line here, right? The original trend line, marked that in blue. Okay, so you're down here at 110.75 for a potential support bounce if you don't bounce here. All right, if we bounce here, then it's looking for resistance up in this region, 1239 to the red line, which is going to be around, basically over the next day or two, 1265, 1270. Okay, and then of course, got this. Which is our setup that we like so much. Okay, so put that there. Your intersection the next couple of days, same idea, right? So you know exactly where, if you do get one of these so-called short covering, surprise, whatever rallies, you know exactly where you're going to be looking on the downside, and it is these red lines in particular. Okay, the further along you go, the more you might want to pay attention to the old trend line right here. Again, there's nothing wrong with paying attention to this trend line still, right? A lot of people, and I know some very well-respected technicians at some big banks, I wouldn't really say they're very good traders, but they will get, like, they see something like this, and this is done, no longer. Disagree with that. Okay, this is still obviously, you can't change the fact that these angles were very important to what was going on in dollar yen. Whether it was even this little response here, or the action on the median line, right? Or the action on the 2075 line, excuse me. And of course the action on the lower parallel, which was the low. Okay, so I hope that is good for dollar yen. Your levels are, again, basically now 1123 is the month open, then 110.75, which is the trend line down here, and then up here would be wanting to probably be a seller starting again around 112.39. Yeah, Kelly. He says, "Damn it, so enjoyable to trade when there are reactions to levels that we've had." Yeah, I mean, it's been, obviously the market has been in the most insane low volatility environment for really quite some time, and it's nice to see it starting to wake up now, because there's just not much to do in a market that's super quiet. So it's nice to see us moving. You know what? Real quick, I'm going to go back to Euro for a second and look at the 4-hour chart, because I know we just looked at the longer term charts, but let's go to a 4-hour chart. So this was a chart from earlier in the week. I was looking for another high before it might fail. Instead, we went to another high and just kept going, which, is fine. But what I would do at this point as well, and this would be more for a short term, if you're trading like more in intraday stuff, of course, right? Is pay attention to, and it's the same concept that we just talked about with dollar yen, and still respecting or paying attention to the levels even after you break them and whatnot, is pay attention to this fork. Okay, so this angle is still useful. So like if you were to get a pullback over the next couple of days, the lower parallel down here, probably a level you're going to watch for support. Okay, even this thing right here, right now, like where we are, it's actually still acting as resistance. Okay, this up here is what I'm talking about. So, you know, this could end up being a support at some point. All I'm saying is that this is still an angle to be aware of and pay attention to. Okay. You know, you could see us trading within this. You know, as you go into as the market is, or the rally is, you know, and say it's stages of you know, slowing down a little bit, right? Momentum slows down. You could see you could see Euro trade up here, right? Kind of consolidate, pull back a little bit, maybe find support down here on the blue line, which was against support way back here before that was, you know, before the election again, the first round, which was the big gap, and then go, you know, then head higher. So keep that on the short term, 4-hour intraday chart, whatever, hourly chart. All right, so there's Euro and dollar again. Those are the two biggest ones that, you know, are going on right now as far as their moves. Cable. So we've had this idea that cable's in this triangle, right? Right, 3A, B, C, D, E. Left an order at 29 last night. Wasn't triggered. Low is 29.05. Thing with cable here is it seems to be getting a little top heavy, if you will. So I want to consider, you know, alternates to this triangle and breakout deal. For one, you're getting right here, you can see the reversal that we're getting on a 4-hour basis. All right. If I show you I'm not sure that you've got a top in by any means, but if I show you, this is you can see the J spikes on a 4-hour chart. Worked out pretty well. Low, low, high, fake out because you went to one more high, nothing here, top back here in March, nothing. But you get the idea. I think this is probably going to be a fake. I think you probably have another high, and here's what could be the deal here with cable. You could actually have where this is 3AB. Follow along with me. A, B flat, C, which is 4, which gets rid of the triangle, and we might actually have a diagonal going on from down here, which would be, again, 1, 2, 3, dip in 4, one more high in 5, before you get a bigger pullback. So pay attention to this line here, which is going to be in red. Okay, which is going to be in red. And again, you can see the 29.75 gap from September. How many times are we going to touch that thing before we actually, reverse fairly sharply, which is a distinct possibility. So yes, with with cable, still think you might be able to get to a high. But we keep brushing these highs. The momentum's getting pretty sad on the 4-hour, right? If I bring up momentum on a 4-hour chart, right? The pokes, we go to new highs and we're unable to get up through through the overbought 70 figure. Okay, and always nice to have the long-term moving average. The black average right here, folks, it's 55 weeks, and as you can see, we've been holding it as resistance here for a while. So I still would be okay with, and I'll, as always, plot the entries in the swing update. Would still be okay with, maybe longs down into the 20-day average, which would be, 28.90 or so. But I'm more respectful, if you will, of the potential for us to see a top in cable. Okay, just with the way that it continues to fail to break out. All right. We'll see. No final decision here, but one more high, and if we put in a good reversal after another high, then I would be thinking that this is a diagonal. All right, 1, 2, 3, 4, 5. So that's that, and of course you have this is a chart from last night. But you still, we've got the 25 line here, right? And there's just a lot of stuff up around these parts to deal with. All right, so that's the cable. Let's look at Aussie dollar. Aussie dollar. Have we made some sort of a low? We've got down here 73. We were triggered today on a long position right near the low of the day so far. You do have employment tonight in Australia. You have GDP in Japan, actually, and then you've got Aussie employment change. Okay, so that's tonight. So be aware of that. And the chart that we've been following the last few days is this one. So this is the chart from last night. Now here's the thing. You still, with employment tonight and the way Aussie, trades on it's kind of herky-jerky on its the way it trades on things like employment and data and whatnot. But if this was a low down here today, then we should be targeting at least 75, because 2 equal legs up from the low is going to put you at 75.05, which is up here. All right. Now, look, I don't know what employment's going to be, obviously, but I did note earlier on Twitter, we talked about a lot of times you'll see days like today, where you have kind of an emotional shock mark, VIX is up like 20-something%. For whatever reason, days like today, you get a change in theme, right? Now let's think about that. What's the theme been lately? It's not necessarily always what you think, right? You could say the theme's been a weak dollar. Well, that's kind of true, but it's mostly been strong euro and weak commodities. So in that sense, we could start to see reversals in things like Euro CAD, right? Euro Aussie, okay? Not saying it happens this instant. I'm saying it's time to really, when you see something like this, it's time to really think about it. Okay. So, that would obviously be beneficial with Aussie and not so much with, uh, for Euro and things like Euro Aussie and Euro Cat. So whatever, you got the employment tonight. Um, I'm fine staying long with stops where it is. You've got the support down here. If you do get a crappy reaction, you still probably want to see support down near 73.80 at that point because that's the blue line. And if we get a positive reaction, great. And we'll see if we can tag the upper parallel or even break it. Okay. Seasonals. Aussie actually is in kind of the window where it starts to actually turn up. Okay. Over the last, the green is 5 years, and obviously the last 5 years have been a dollar bull market, so an Aussie bear market, especially an Aussie bear market. But the 30-year and then the 10, 15, and 20-year seasonals all put in a low this week, and for the most part are bullish into July. Right, so this idea of having a A, B, C, D, E, it's not totally nuts. Okay, from at this point, given the seasonal factors, can you still get 73? Yeah, we could. Right, that's the trend line. But at this point, we identified a bullish sequence back here. Right, yesterday in the post, it talked about look at a line chart. 1, 2, 3, 4, 5. Okay, A, B, C, potentially. That was the idea. Aussie dollar, what do we got? Yeah, view a 4-hour chart of Aussie on a closing basis. Notice a 5-wave advance, the drop and pop may compose. So therefore, a drop below 1795 would be viewed as satisfactory, complete a 3-wave decline. So that's what seems to be going on here, or that's what just happened. Okay, so in that case, in that sense, we'd be looking up to, I should say, 75.05, which is the 2 equal legs. Now I want to see where this other stuff comes in here. So 75 be the 618 of that rally. What would be the 618 of the decline? Very close. Okay, 75.74 to 75.89 gives you a pretty good little window there to target. And again, employment tonight, but something to know. This is the big line to get through, I would say. Okay. You get through there, I think we might be home free for a little bit in Aussie, and maybe for a lot of bit. All right, so that's Aussie. And let's remember this whole idea about the euro, the theme changing maybe from Europe outperformance to commodity, writing this down, outperformance. Right? Let's say, we've talked about this concept before, but let's just say that we are in, let's say that we really are in a dollar bear market. And I don't know if we are, but let's say that we really are in a bear market in the buck. It's not as if everything is going to go up and down against the dollar at all times. the same time. It just doesn't work like that, right? You get the baton passing. So at times, the euro will outperform. That's happened recently. At other times, you'll see emerging market currencies outperform. That happened with dollar rand, right, over the past year until recently. And at other times, you're going to get your major commodity currencies outperforming, like Canadian dollar, Australian dollars. It's really hasn't really happened since last April, in May, because we had the April top in Aussie, and the May low in dollar CAD. Okay. All right. Let's actually go to Kiwi. I don't really have anything to look at on Kiwi at this point, right? This level is still resistance. The market turned up from, to me, kind of the middle of nowhere. You know, you have the trend line down here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Right? With this being 1, 2, 3, some sort of disgusting 4 or 5. I mean, we could be building the base for a bigger something bullish, right? This actually could be a pretty good looking fork here to work with. Pattern is not so clear as far as a wave count is concerned. I shouldn't say that. There's some clarity, but you know, it would have been better if this was like very clean triangle and you got a thrust down into 68 or even down into 66.90, and then you got the turn higher. But hey, if it wants to turn higher now, I'm not going to stop it, and we'll try to do the best we can to identify something bullish to trade on and do just that. Remember, we're getting close to Memorial Day, and Kiwi likes to rally after Memorial Day. Here's the Kiwi seasonals, right? You can see that the seasonal aspects for Kiwi across all time frames except for 5 years actually do bottom. They've already bottomed. They bottomed last week. And Kiwi's in line with that, putting a low in last week so far. So it will be worth paying attention to New Zealand dollar upside potential or bullish setups. Okay. I can't speak to necessarily on the crosses at this point, but New Zealand against US dollar for sure. Okay. Dollar CAD. Dollar CAD may well have put in some sort of a low here. Or sorry, not necessarily a low. At this point, I'll get rid of that and that. Okay. 240-minute chart, 4-hour chart. So remember, we have the COT position, right? The record COT position. I can talk about that if you'd like, but it kind of is what it is. And this trend line here, you've broken that. This parallel here was support, and then it was resistance. Again, would like to, I will wait for this day to finish, as I often do. There's no reason to be chasing stuff in this kind of environment, but this is a viable short setup at this point, because here's your trend line. This is the original slope, so see the only trend line you can really have. And it has broken, and then you can see that you've had resistance on it for essentially the last 2 days. All right. I guess in a perfect setup, you kind of get, you know, maybe a little more, maybe even another day or two of sideways trade with this, in order to frustrate everybody to no end, and then you would have maybe a tag of this level 36 3630s confluence here, and you could sell that. And you shouldn't be surprised to know that after this week, again, commodity currencies, right, in line, the longer term seasonal stuff with commodity currencies are bullish against the dollar, which would be bearish dollar CAD. Okay. All right. Okay, so that's pretty much all the majors I wanted to look at. We'll take a look at some crosses. Sandy asking, when will I be part of automated alerts? I don't have that capability to do that. That's something that Mike's working on with our, our provider of that software. But we will. I know he's working on getting more people on it. Put it that way. Just for fun, you can see here's the automated alerts. These are meant to take advantage of trending moves. So you can see that the last couple of days have been pretty good with buys here, buys here, buys here. Bad trade this morning with a sell, would have gotten out, stopped out, but then it bought on the dip, and then it just got out actually. So, these if you guys are on the automated symbols or automated system thing here, the alerts, these are the kinds of market conditions where it will do well, right? It's meant to be it's just like it sounds, dip and rip. It's meant to be a kind of a get you into the move, right? Extended move and get you in and kind of ride it a little bit. Sarab asking how many pips should be taken. So there's only two exit rules. One is it takes, first of all, it's the square root of the closing price. So in the case of the limit in profit, 1068, it's essentially taking 30 pip gains. Okay, that would be about, let's see here. Yeah, it's essentially taking 30 pip gains. So we'll look at it real fast here to see what the, okay. So the last trade, what is this thing? Sorry, oh, this is 2016. That would make a lot of sense. Okay, so here, okay, so it's taking essentially 28 pip loss, 30 pip gain. It's a set, for the most part, it's taking 30 pip gains, or 30 pip losses, but actually a little less, 28 there. And it's getting out after being in the trade for 3 hours. Let me check something real quick. Stop factor, limit factor. Okay, so let me tell you the, all right, so here we go. I'll do this. So do you know where we opened the year at in the euro? I think it was 104.66. So 104.66 square root is 102. Okay. So the take profit is 51 pips. Okay. The stop is 34 pips. Or if it's in the market for longer than 3 hours, it just gets out. That's the longest a trade can last, is 3 hours. Okay. All right. Kind of gotten off track here. Where were we? We were going to go at I was going to look at some crosses, and then I was going to look at commodities, because I know that some of you guys want to look at commodity, like Sarab wanted to look at gold and silver, copper, and oil, I believe, and which are always good to look at. But let's start with some of these commodity currencies. Okay, so some of the crosses. So euro yen. Okay, so euro yen has topped. So the question is, where do you want to short it? So here's the deal here. I like this trade idea. Get rid of that. All right, so we're going to go to a daily chart. This is an hourly chart. Okay, so euro yen, this is the trend line back here, okay? And we had a fork on this, right? Yeah, that was it. That was that. Okay. Now we extended parallels up off of the highs back here in December high, and then all December 15th high. So this one crossed off a lot of high, like 1, 2, 3, 4, like 6 different days. Actually, that ended up being where the high was yesterday. You can see right here. Okay, so I think that euro yen's probably headed back to the former resistance line, which would be fairly close to, the monthly opening actually, which is 121.50, and then of course you've got your slope stuff around there as well. Okay, minor support probably down at 123.40, but now we need to go to a 4-hour chart. So we've zoomed into a 4-hour chart. I had a question today, I think it might have been from Kelly, who asked me where I thought that you might see a place to get out near term for euro yen. I said 23.65 because 23.63 is the weekly opening price. It's just a good spot for a bounce. Okay, it's kind of all there is to it. And what we want to do is we're going to draw a short-term one. So remember this. So that's your trend line, okay? Remember we had this? No, we didn't. That was totally different. What am I talking about? Yes, we did have that. Oh yeah, we had this because that was where we looked for the top, right? And it was this line, which I had in red, and that's actually right where we topped. Okay, so here is what you want to look at on short term. So draw a modified shift fork, or it's actually really shift, but it's just a trend line, and you put a parallel here. All right, so you see how this did that support a couple times. So again, could see some support around 23.60, 23.80 or so pretty soon and get a bounce. And if you do, my thinking is that this line actually provides resistance up here. So we'll make it in red to make it clearly obvious that it's a level for resistance. And that would be up, depending on when you get there, 24, 70s, 80s, whatever. Okay, it could even be, if you get up there tomorrow at some point or whatever, it could be close to 125. So that's where you would want to be looking to short up here. Could take some off down here, 23.20 after you take out the lows. Ultimately though, 121.50 is probably the destination for euro yen. and that's euro yen. Okay, pound yen. Pound yen's already come back to this is the yearly opening price. This is where we are, right? Lots going on this year, but we seem to always be trading around the yearly opening price. With pound yen, setup is a little simpler. It's just 145.73 is where you open the week, and if you were to get some sort of, bounce consolidation, whatever, back into that level, it's probably a short. The euro yen setup is one that I will watch or pay attention to and look to trade, though, a little more closely. Okay. Just because I have the it's supposed to be up there. And of course, like everyone's going to do it differently, right? But I like to trade your currencies separately, just on dollar terms, right? So I could find myself, short pound dollar, which maybe short dollar yen at the same time. Euro yen is one that's so clean right now. I do like just probably playing that back up into here. Okay, what about some that I said we should pay attention to here? So like your Europe against commodity currencies. Okay, here's what I mean by themes. Theme changes. You remember the China crash in August 2015, right? It's big emotional days. This ECB down here, December 2015. This January 2016. That was the crude low in the commodity crash, right? Everyone freaking out, China tightening credit. This is the election. We might look back on this week at some point and say, oh yeah, remember when we were 152.50? Trading back at 145. Might say, remember we were at 152.50? Oh yeah, that was the Comey Trump, whatever stuff, stupid stuff. But basically 152.50 is your big level to pay attention to. It's weekly reversal resistance. It's the close of the week from last year, right? From January last year, which was that commodity crash, the China crash part 2, and it ended up being more or less the high from the election. So this is a really good one to watch. I don't want to be shorting it now because I still think that you've got 100 pips against you at this point. So it's one that I think could be really, really lucrative, though. Up into 52.50 and then turn over. Okay, could be a really good one. And if we're looking at this, you actually are up against the you're up against the upper parallel here. But let's remember, a lot of times you do get these type of moves. They tend to end with kind of a bang, right? And so you really got to be patient with these things. If you start shorting too early, you might not stick with the trade if it goes against you. It's up. Obviously, it's up to you. I personally will be looking to sell 152.50. I tell you that right now. Right? I'll put it on and give it and see how it wants to work, if it wants to work. We're actually at this, as I talked about earlier. This is the distance. We're looking at this with euro dollar. This is the distance between the median line, the upper parallel. We're at pretty much at it now. But again, big picture perspective, 150, 250, okay? And also go by the adage, right? Let's say that you want to be shorting this and it doesn't get to 52.50 and it turns around and tanks and you're like, damn it, I missed the trade, you know, this sucks, whatever. Look, markets will be here, okay? And go by the adage that you'd rather wish you were in a trade than wish you were out of a trade, right? Would you rather be sitting there wishing that you had this nice couple hundred pips gain, or would you rather be sitting there with a 200 pip loss saying, I wish I was not in the trade, right? It's pretty clear which one it is. Either way, that's the big level. All right, what about Euro Aussie? Because that's the next one that you'd want to watch out for. We're actually coming back close to the trend line again, aren't we? By the trend line, I mean the 2012, 2015 trend line. So yeah, that would probably be, well, I don't know, Euro CAD one's cleaner to me, just because of the level. I guess you'd start paying attention around 151 though, just because that's the September 2016 high. Let's see if there's another fib here. The 618's up here, isn't it? 54.27. It's kind of a ways away. So this one, Euro Aussie, not exactly the cleanest one in the book. As far as the levels are concerned, EuroCAD's better, but watch the 2012-2015 trend line, okay? It's in magenta on this chart. That's going to be up the next couple of days in the mid 152s. You do have a square root level at 52.60. So, yeah. All right, let's look at the commodities. So first we will go to gold. Pretty amazing, some of the headlines we saw last week, right? With the no one, like you talked about people, you know, there are headlines about hedge funds dumping gold the most in said number of, you know, months and years and this and that. We're actually getting back to the trend line here. The 2011-2012 trend line is very close. This is a lot like yen, obviously. You actually have resistance on 1260. 1260 to 1270 is going to be potential for, you know, potential resistance. What I would watch for, you know, maybe being a dip buyer on this, just like, you know, it's just like you'd want to be kind of a rally seller in dollar yen. Is watch the top side of these guys, okay? So draw your trend line down here, take your parallels, and there's two of them. You can see this one, which crosses some highs, okay? And then this one, which crosses, extends off this high, and with support, that was just this morning, okay, during Europe. So these two areas, again, if you get, you know, some pullback into it, and given all the headline risk going on, I wouldn't be surprised to see that. You have levels to pay attention to there. Let me see. Let's look and see where there's high level or high volume stuff on gold, because that's always helpful. Well, just like, well, oh, okay. We just had this, what is that, the second highest volume day or volume hour of the year. So that might be some capitulation right there. So you could come off. And we actually are at a high volume day, 4-7 close. So yeah, you can't chase this here, in my opinion. Okay. $12.60 to $12.70 resistance, basically. Support, you know, if we can come off, would be down on these parallels here. Let's take a look at silver now. I know what it was with silver the other day. We wanted to, this is the one we were looking, or I was looking at. I know you're going to want something shorter term. I guess my worry though with silver is that, look, silver, here's the low from December 2016, okay? Here's the low from December 2015. This is a 28-degree line back here, and it was not quite support, but it was close. This is resistance with a fake out. The risk here then is that you come back and test this level, which means you could go all the way back and test the low from December 2015. Okay. That's just in the back of my mind. The reason I'm saying this is because I just don't have like any really good like bullish structure to work with. I mean, this, for example, this is your original trend line here off the lows from 2015, 2016. Okay. You can see they don't really hold that. I guess you kind of can hold that. Let's go near term. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, you've probably completed an impulse here. So in that sense, the short-term picture is like gold in the sense that we're in need of a pullback and another rally. All right. And all of this from here may end up as a triangle or something. But that's what I would be looking for. You have an impulse higher from the low. Therefore, the risk is that you do get a minor, turn lower, a dip. But that dip should be bought. That's your resistance though, right there. The big resistance. So like here's a trade. So a trade plan for silver would be to essentially look for support on a pullback, probably near 1662 or so. Good horizontal levels. Bullish against the low down here, which is essentially 1603, and targeting up near 1760, which is the old resistance line up here. Okay. $618, $17.80. All right. Oil, crude, we looked at here the other day. We had 5 waves up. We got a pullback. Pullback didn't quite get to support that we had marked as 4707.34, but market has turned up enough to suggest that this is a 3-wave decline, by the way. Okay. And if you look at RSI on the 4-hour, it was above 75. It pulled back below 50. That's good enough. So I think oil probably is headed for another leg higher. Maybe back to 53.70, which would be 2 equal legs up. Yearly open 53.87. So I like oil higher, from nearby. Let's see if we can let's see if we can pay attention to a crude volume spot. Nothing recently. But yeah, I like crude higher. Okay. So hope that helps. Again, potentially all the way to 53.71. So 1, 2, 3, 4, 5, ABC. It's worth being bullish, in my opinion, for another run in crude within what is essentially a very large range, right? If we go back, this could all be a triangle. This could be A, B, C, D, E. And then we had a question on copper. Copper being copper. Channels lower, and it, with the exception of a couple days here, it is trying to hold, the support. So this is your channel. If it gets out of here, okay, if it gets out of this channel, I'd be looking for upside acceleration. And that was log. I'd be looking for upside acceleration. So up through 260, upside acceleration. If we go to a 60-minute chart, let's look at the short-term pattern if there's anything interesting. Nothing especially clean. And notice how fast I did that. I'm not trying to look and see if there's anything there. You either see it or you don't. Okay, it's either there or it's not. See if we have any volume stuff in copper to pay attention to. volume levels obviously are always very useful as far as providing points of reference. So we have a very high volume level here, 5:11, 9 a.m. And it's usually the levels that you think. So it's right there. It's essentially the same as the volume level from back in November. What do you know? So 250.90. So here's the deal with copper. Based on this channel that we were looking at, okay, I would be looking at, if you got a dip, I would watch 250.90 for support in copper. Okay, and if you get up through this channel at 260.40 or so, you know, decreases obviously with time, then I consider it a solid breakout. All right, so are we good? I'm going to wrap it up. We've gone for a little over today, but that's fine. And we'll get this archived, and we'll put the archive session up here ASAP. So thank you all very much for attending, and exciting times here in the markets. Finally, let's hope it lasts. All right, talk to you guys later. Take care. Bye.